Now, typically, folks are going to get into the original property just with a conventional or conforming loan. They may take a low down payment loan, like an FHA type loan, which would require a lower down payment, and then you would have to pay mortgage insurance for some certain period or until you've had at least 20% equity in the property. That's the typical way that somebody buys the house, unless it's such a fixer-upper that it won't qualify for a traditional mortgage, and then you would have to go to a private lender, what's called a hard money lender. So typically somebody's buying the house with a regular mortgage. Now, renovating it, on the other hand, is a different story. So there are a couple of choices for renovation loans. The first is something called an FHA 203K loan that combines the purchase price and renovation costs up to a certain amount of money into one loan. You can do that for a low down payment. Generally, contractors aren't big fans of 203K loans. There's a lot of bureaucracy and compliance that goes into that. And that might not give you the flexibility that you want to find the best contractors for your job. If you're doing a renovation after you've lived in the property for a while and there's already a little bit of equity, could consider a home equity line of credit. So that could be perhaps equity against another property that you own that allows you to finance the renovation. You could consider a securities line of credit. So, for example, if you have a large taxable brokerage account, you may be able to get a just regular margin or a securities line of credit. Of course, you wouldn't want to borrow too much. That would be risky. Certainly, time to discuss that with your financial planner. Assuming that you've got a good risk management strategy in place, that may be a good way to fund a renovation project. A personal loan just guaranteed by your signature then is another option. Liquidating stocks or accessing, cash savings is always an option, of course. And then private or what's called hard money loans are that's short-term financing with quicker approval. We did a video podcast just a few weeks ago about hard money loans, so we'll reference that in the show notes. Those are generally a little bit higher fees than traditional forms of lending, but the time to close can be a little faster.